Good morning, everyone. So today
Morning,
we're going
Mark.
to, good morning. Today we're going to be going over a graph. And so yesterday I went to the real estate board. I said, can you give me a graph going back to 1995? And so why 1995? Well, that's the year I got into real estate. And what I want to talk about is the 30 years of my career and what I went through over this period of time. And so let's start out. 1995. I graduated from BCIT. I got into the real estate market in June. And I didn't know any better. I was 22 years old and I had no idea what was going on in the real estate market. And it was a blessing. Everybody, if you look at what the real estate market was prior to 95 on this graph here, it was actually up here. So I got into the market when the market started to go down. Now, I didn't know any better. I just sold real estate. And so I go to work, I start selling real estate. I hear all the older realtors complaining how bad the market was. And I just kept selling real estate and kept selling real estate as the market went down. Now, in 1997, right here, was an interesting time because Hong Kong was being given over to China. And so everybody was scared and moved out of Hong Kong. And that's what fueled the market back in the early 90s. Well, by 1995, they thought, well, it's not going to be so bad. And so the demand for housing in Vancouver for people coming over from Hong Kong declined and they stopped being a driving factor. At the same time, our stock market was doing fabulous back then. It was during the dot-com bubble, dot-com time, and it resulted in a bubble. And I had conversations with people in 1996, 1997, and they're very similar conversations I'm having right now with people. And the conversations go like this. I'm talking to a first-time buyer. I'm talking to an investor. Why would I put money in the real estate market when I'm making 20% on the stock market? And as a 20, by that time I was, let's say 20, 24. As a 24-year-old, what do you say? How do you say, no, it's great to buy real estate? I mean, the only thing I could say is when the market's down, buy, and when the market's up, sell. That's what I read in a book. Buy low, sell high. And so that was a low time in our market. And I didn't know any better. I just kept selling real estate and my business kept growing. Now, during this time in 1998, we did have the stock market corrected. A lot of people lost money. And at that time, I feel people started to realize, well, hey, real estate's not a bad investment. I'll put money into real estate. And the economy started to improve. And so we saw a little peak right here around 1998. Now we had a bit of a dip going into 2000, but not much of a dip. Overall, it was just grow, grow, grow. Now, in 2000, we started to get people coming over from mainland China. Before that, no one really talked about Mandarin. Everybody talked about Cantonese. And all of a sudden, we started getting people speaking Mandarin coming in. Basically, 2000 to 2002, there was a ton of sales. And this graph, this isn't prices, this is sales volume over the Greater Vancouver Real Estate Board. But it just goes to show you when prices go up, we get a lot of sales. And so the prices were going up big time. I mean, if you think about multiple offers These were multiple offers here. Now, we had a little bit of a decline in 2021 because we had such big price increases, the market slowed down just slightly. But then by the time we got to 2003, we were peaking again. Now, I'll give you an example. I bought a house in 1998 on the west side near Queen Elizabeth Park for $414,000. It was a nice house. It was on a 40 by 125-foot lot. And I renovated it, probably put about $30,000 into it. Did a lot of the renovations myself. And lived there for about 3 years. And in 2000, I sold it, 2001, I sold it for $445,000. So not much of a gain, but I bought a house over on West 23rd, just off of Oak Street. And I paid $390 for that house. $390. It was in rough shape. I spent about $150,000 renovating it. And by the beginning of 2003, oh no, it was probably around 2003, I sold it for $900,000. So that goes to show you how fast the real estate market can go up with pricing. Now, that was a pretty hot time. I think I sold it right at the peak. And sales did decline. Volume did decline, 2003, 2005. But it was still way up from before, the sales volume. And there was a ton of realtors getting into the market. Real estate was like the best job in the world. You made lots and lots and lots of money. And the stock market was rocking and rolling. People had money. It was pretty good times. And it basically remained good times. Prices were way up here at that time. Then we got into 2007, and the prices were so high that we start to see less volume. And that gets us into the interesting times of 2008. I said, I better get serious into selling real estate. I got a Mike Ferry coach and started going to see Mike Ferry retreats and getting coaching, and took real estate very seriously. Now, by September 2008, we had that big crash in the States. Now, Canada was affected briefly for about 6 months, but then our market shot up back again. And so 2009, we had great growth. And so you can see the sales volume. We still had a lot of sales volume compared to what we have now. Look at the top of 2009 compared to what we're dealing with right now. That's a big difference, right? So we still had a lot of sales volume. Now, going into 2010, the Olympics, lots of optimism, prices were up, and our inventory was down, so we had sales volume down. Now, 2010 goes by, and we get into 2011. The interesting thing with 2011 is we had a decline in prices, we had a decline in inventory, a decline in sales volume. And one of the memorable moments is RE/MAX at the beginning of the year would take all their top producers out for lunch. That was one of the benefits of being at RE/MAX. They didn't give us stock in the company or ownership in the company like EXP. They would take us out for lunch. And it was all you can eat, all you can drink, fabulous lunch. And you get to hang out with all the big shots in the office. But they pick us up in a limo, And I'm sitting beside this guy. I'm not going to mention a name, but he was a high producer. And he's like, oh, man, what a tough year it was. And I'm just like, oh, I mean, it was tough, but I didn't think it was this tough. He's like, yeah, I had to sell my RSPs to pay my bills. And I'm like, geez, that is tough. Thank God I didn't have to do that. But you know, these are the things that, that was a memorable moment, that it was a tough market in 2011. And if you look at 2011, the sales volume is pretty much to where we are right now. And the sales volume back in 2007, pretty much the same. Sales volume 1999, a little better. 1997, way worse. Now, there's a lot more real estate to sell today than in 1997. So they don't put this in the graph, how much more real estate there is. But if you think about these lows and how much more real estate, like when I got into the business in 1997, Yaletown was maybe 3 buildings in Yaletown. Brentwood didn't exist. It didn't even exist in 2007, really. Couple buildings, that's it. So now we're 2012, things are starting to pick up a lot. And I tell you, prices are going up like you wouldn't believe, multiple offers, lots of money. And we get to about 2015, prices are so high that we start seeing less volume. And so this is the volume here, starts going down, but the prices are still high. And all of a sudden we get down to 2017. And at this point here, we get the government stepping in and putting laws with foreign buyers. And it affects our market. The other thing that happens is we get into 2019 here, and people from China start, it's harder for them to get their money out. I mean, they're still able to get their money out, but it's really hard. So this was a kind of a slow period. And then all of a sudden, what happened in 2019? Can anybody tell me? End of 2019?
The world shut down.
Pandemic.
2020? Beginning of 2000, we got COVID.
Yeah.
We all got COVID. And for a bit, things shut down. So our sales volume's down. But then I remember I went to a Mike Ferry event in January. Every year I go. And, people were a little, it was in the news. We're talking about it. And then by March, oh my gosh, I tell everybody was trying to find masks to wear. And, I was selling stuff without even going to it. We started Zoom. Zoom started. What we're doing now, we take it totally changed our life. And one of the things I remember back then was I had this listing and the person wanted to sell it. So I said, okay, but you can't go into it. Like, oh, it's because it was tenanted. So the tenants don't want to leave. They don't, it's a pandemic. So I called the tenant. I said, look, I need to see the place 2 times. And they're like, okay. So I go there, we're putting rubber gloves on, masks. And I think some people had some glasses on too. And the photographer comes in, takes a floor plan, does the pictures, the video and everything. And I go in and, we're scrubbing down with rubbing alcohol and all that stuff. And we get the pictures done, we put it on the market, we do the marketing, and about a week later, I deal with offers. And to my surprise, we've got people that want to buy it. And so they buy it sight unseen, subject to inspection, where they get to go and look at it. And that was the second showing. And we sold the property. And that was like probably one of the weirdest things for me in real estate. Now, we did a lot of those sales like that, and it changed the way we sold real estate. Now, what happened is people didn't really have anything to do except for look at homes. And all of a sudden they're working from home, so they need more space. And all of a sudden interest rates were at like nothing percent. I mean, I was getting people into 5-year mortgages for 1.5% at the lowest. It was like $1 million mortgage, $3,000 a month. People were buying second properties, third properties. You know, they're living large. Like you could go up to Whistler and you buy a $4 million property. You know, it wasn't so expensive. Now it is. And so we had this tremendous market, and it was probably the highest market we've seen since, let's see, 2003. But I mean, still way higher, way more volume right here. And the prices shot up a lot. They shot up a lot. And then all of a sudden, prices got so high and interest rates in 2022 started to go up. And the interest rates went up and the prices were so high, the affordability wasn't there. And all of a sudden, the sales volume started to go down. And down, and down. Now we have a little bit of an uptick towards the end of 2022, but really it just went down. And then in 2023, this goes to 2023, it just went down. There's a little bit of an uptick here, because what happens is they call it the bouncing cap. You drop a cap, it drops, and then bounces up, and then drops. So that's what we call it. And so this market here, I mean, if I was to look at stats going into, you know, to predict what's gonna happen is I believe we're gonna start to see a steady increase, but it's not gonna be much. Now, we will see the market up here. The big question is how long is it going to take? And to answer that question, you have to look at the past. How long have other markets taken to recover? And what I see here, to reach a peak, we're probably like 2 years away, 2.5 years away to get to another peak. To see a rising market, we're probably about 6 months away. And when we do see a rising market, it's going to be a really fast market. The demand is going to be so high because right now we're not getting a lot of building going on. There's not a lot of supply. And so when you have no supply and high demand, that's when you get the prices going up. When the prices go up, people say, oh, geez, it's time for me to sell. And that's when the volume goes up. So here's a graph from 1977. And this is price. And it's really interesting to see. It's broken down with detached is dark blue. And then we've got attached and apartments. And it's really interesting to see that a market will always go up. But on the way up, it goes like this. So from the lowest of the market to a peak of a market is probably a couple years, maybe 18 months, 18 months to 24 months. And so that's my journey over the last 30 years. I mean, the one thing that I find very helpful, and I do this, whenever I've got a question on the real estate market, I look in the past, and that will give me my answer, is the market always goes up. And the stock market goes up and goes down, just like the real estate market. And so when people are saying, well, yeah, this is, when everybody's buying, that's the time to sell. And when everybody's selling, that's the time to buy. So if you want to make a lot of money in real estate, buy when everybody's running for the hills and sell when everybody's greedy. And that's my experience over the last 30 years in real estate.
Yeah, I
Thank
mean,
you,
there's a lot of people,
everyone.
even buyers kind of saying, well, they're saying, oh, it's nice the interest rates are going down, or they're waiting, they want to wait for interest rates to come down even more before they buy and stuff like that. And it's, I get it. It's you want cheaper money, but you're gonna end up paying more on your purchase.
Yeah, I mean, you date an interest rate, you marry real estate, right? So the interest rate is a short-term thing for when you own your home. Your real estate's a long-term thing. I mean, I've owned real estate. I've got real estate that I've kept since 2002. And if I look at this, what it's done since 2002, and I look at what it's done even today in this down market, I'm pretty happy. The other thing I'm happy about is you'll notice after 5 years of owning real estate, no matter what the interest rate is, you pay down equity. And that's huge. The one example is I bought a property in Whistler in 2016. And I paid $560 for it, which was a great deal. I didn't know it was a good deal at the time because that wasn't a time to buy real estate up at Whistler. People would be like, why would you buy something when you just rent it? And so I bought this real estate on a whim and sight unseen. I got a 30-year amortization mortgage on it. Interest rate was probably about 3.5%. It was a pretty good interest rate. And after 5 years, I paid down $60,000. Now that's $60,000 I would never have had. I built up the equity. Now, in that 5 years, that property doubled. And so when you buy a stock, you're buying a stock for $100, you're putting $100 into it. When you're buying real estate for $100, you're putting $20 into it and borrowing. And so when the market goes up 20%, it's not going up 20% on the money you put into it. It's going up 20% on the value of the property. And so that's why real estate is so powerful, because it's leveraged. And most leveraged investments are risky. But with real estate, you can rent it out and get income. Now with a home, you're buying your home, and this is for people buying their first home. Why are you paying your landlord's mortgage? You got to pay rent anyways, so just pay a mortgage. thing I would get is, oh, my mortgage is way cheaper than, or the rent, my rent is way cheaper than the mortgage. You're building up equity when you pay a mortgage. You're throwing money away when you're paying rent. Well, there you go. I hope I answered any of your questions. This graph, but I like to call it a map because it kind of shows you my journey that I went through over 30 years. You know, it's, you know, when you're talking to clients, show them this graph. Show them what real estate has done over the years. And yeah, we've got times where it goes down. We've got times when it's flat, but overall, it goes up. And there's one thing about land. You can't make more land. There's only so much land. And in places like Vancouver, where you've got mountains, river, and ocean, we can only, I mean, we're built out. Whistler, we're built out. You know, the only places I see where there can be a lot more building going on is places like, if you ever fly over Edmonton or Calgary, it's flat. So as far as your eye can see, they can build. And that's why places like Edmonton, that, you know, they don't get huge price increases, but they get great returns on their rent. They get income coming in. So it's a different Whistler. Very limited in how much inventory there is, and that's why the prices are so high. So there you go. Thanks for tuning in, everyone. Feel free to give me a call if you have any questions on this stuff.